Welcome back. You're tuned into Bazaar Morning Call. Well, we have listed on all the top stocks you need to track. And so for the time being, let's get some fundamental analysis going. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good morning. Good to see you win. Well, I want to talk about a large deal, a large order that's been backed by Sterlite as well as Dilip Bilkon, with regard to this BharatNet program. So the order has come through. What is your view on both these two stocks? The way I understand it is Sterlite does the fiber. Company like Dilip Bilkon, NCC, they'll do the EPC part of it. And the last mile will be Tejas Networks. So your view on this order and what do you like from the value chain?
Good morning, Nigel, and thank you for having me on your show. I think about time that Tejas and Sterlite got orders. Because if you see the performance for the last few quarters or so, Sterlite actually has been reporting losses and Tejas, we have seen a sharp decline in profitability, but it's a volatile business, lumpy business. So I think it's great news for all the companies put together. But I would still like to, wait and watch for more orders to come through and the order build up to offer more visibility. From valuation perspective, I think Sterlite Technologies is quite attractive, about 3,700 crores type of market capitalization, and such a huge order certainly will drive the growth and maybe take the company to a new growth phase as well. So if you want to play this particular development, I think the best way to do would be through Sterlite Technologies. As I understand, the order for Tejas is not that big as compared to the size of the operations.
Okay, all right. So that's BharatNet and, how to look at the potential beneficiaries. Deepan, hi, morning. Let's talk about the potential beneficiaries of these electricity futures. The market first thought it will be MCX. Now NSE is saying we also have, we're also going to launch this particular product. What's your sense? And anyway, let's broaden it up. I mean, exchange and then BSE yesterday, there's a lot of worry about volumes coming down and the premium turnover again falling. So let's get your quick take. IEX, MCX and BSE.
Yeah, good morning, Surbhi. I think it's an avoid for me, especially IEX because of that particular regulatory framework which may come through, which may take away their edge. I think it's called coupling. Secondly, I don't know how that will affect the electricity futures on NSE as well as MCX. In any case, I think such futures will take very long for these two exchanges to really scale up, and avoid BSE and MCX because of the valuation. Although we are invested in MCX and it's turned out to be a great investment, but at these levels and these kind of valuations, I think going at 70, 80 times or so, it doesn't really make sense despite being a monopoly. And BSE Limited, I think still a lot of regulatory risks over there, which we would have taken had it not be for the high valuations. And other listed auto players with the exception of M&M. And of course, in the two-wheeler space, I don't need to say our favorite stock. So,
My favorite bike, your favorite stock.
Okay, that's Aisha. Go on.
That's Aisha, yeah. Okay, all right. Deepan, I wanted to ask you about Paytm as well. What's the view on that particular name? The stocks very quietly, it's been perking up. It listed around that 2,000 rupee mark, crashed to a fourth of its price. And in the last few months, it's gradually started moving towards 1,000 rupees. And the buzz is that quarter one will be a very, very strong quarter, but they've guided more or less on that front. Do you think it has more, more room to move up?
Nigel, I think we are constructive on Paytm, and there is, I would say, a certain level of calm performance coming through as far as the company is concerned. They are not making major announcements or any ambitious plans. They're just focusing on executing their strategy. They're trying to diversify their revenue stream, and some of the new revenue kind of products which they have got, which is selling financial products, that is gradually scaling up well. They are clearly taking full advantage of the platform and the number of users which come on the platform as well. And some of the loss-making kind of ventures are being curtailed. So I think at some point of time, Paytm will turn out to be a great fintech company. And if you're a patient investor in that, then you will reap the fruits of those particular strategy. But you need to have a slightly longer term view, 3-5 years or so. And you should be able to stomach the volatility which comes with the earnings of such companies.
Okay, all right. So probably not a smooth ride, but if you have the risk appetite, then maybe it is for you. Got that. Deepan, thanks for that.
Deepan, we had a large trade that took place on Asian Paints. Now, part of the street was anticipating this. This block is out of the way. Now, it's a large block, 3.5 crore shares, amounting to close to around $1 billion. Your view on this name, the street is very, very divided on this. Some believe that the supremacy will continue and the stock has spent enough time at these levels, while the other part of the street says, no, competition is really revving up out here. And the challengers will continue to remain in focus, and that means the one that's held fort will continue to remain under pressure. What is your view on Asian Paints from here on?
Najib, I'll go with the latter view. It is becoming more and more of a red ocean in the paint industry, and the incumbents are under severe pressure. The challengers are kind of doubling down. You saw what Jindal Group did in terms of buying Axo, and also Grasim also is not letting off. It is going very aggressive in the paint industry. There are smaller players like Astral also, which are revving up. So I think that from like a 2-3 player industry, it's going to become like a 8-10 player industry. And all of these players, the new entrants, have got deep pockets, and it's going to eventually lead to lower margins, lower return ratios. And at some point of time, it's going to impact the valuations also of the companies over there. So for me, Asian Paints and other paint companies are an avoid, and every rally is an opportunity to exit from these companies.
Okay, all right, got that. Deepan, I also wanted to ask you about Zee. They have 2 board meetings that are lined up to plan the next few years. Now, the promoter entity, after many, many years, started creeping into the stock, if I'm not mistaken, at around 100 rupees and closer to around 120 rupees. The stock currently, I think, is holding at around 130 rupees. What's your view? Cheap? It's been cheap, yes, but for a reason. They're though guiding for better times ahead. Would you buy?
Yeah, I think, Najee, one particular news item caught my eye for Zee, and where they said that they are very much focused on reducing their losses in ZEE5, which is their OTT platform. And if they are successful over there, I think it will change the entire contours of the stock and maybe take it to a new growth phase. And I like whatever work has been done by the management so far in terms of strategy post the failure of their merger. It's becoming a more kind of a lean organization focused on cost, getting more profitability growing, and no doubt it is cheap. So I think I'm going to study it far more closely than before. I had thrown in the towel for Zee, but I think I should pick it up again and look at the stock more closely. And someone with a bent of, taking contra views, for them, I think Zee is a classic, I would say, template to look at working on the stock.
Got it. Okay, all right. Got that. Deepan, later on in the show, we're going to be speaking to some of these solar module, solar cell makers as well. Premier Energies is one of the stocks that we're looking at. Waaree, for all those that threw in the towel, the stock did a quick fire, 2,000 rupees to 3,000 rupees. Though, there seems to be that at some point of time, the street is skeptical that this entire module capacity will get into overcapacity from being underutilized. What's your view on these names, Waaree or Premier Energies or any other play you're looking at from the solar theme?
That's right. I was very positive on Waaree Energies and Premier, but never really bought the stock or kind of recommended it because of this exact reason. There's so much of capacity coming up. It's quite phenomenal. And it seems that the entry barriers are pretty much low in setting up such manufacturing capacity. You have the Adanis coming in, you have the Tata Group also. So I think it's going to get a bit crowded over there. And with US, preventing or rather raising tariffs for export of modules, I don't know whether the China plus one strategy plays out for this sector as well. But we are very positive on the renewable space. And the best way to play it would be through the wind energy equipment companies. There's Suzlon and there's Inox. In case you missed it, Inox is merging its subsidiary and it will become a consolidated company. And that certainly, I think, will improve the prospects, reduce the stress on the balance sheet. Not that there is much. So, and that's one product, you cannot just import it from China and set it up in India. So very positive on the wind power equipment companies. Having said that, we have an investment in both Suzlon and Inox Wind.
Suzlon and Inox. Okay, got that. So that's how you're playing the renewable space. Always a good conversation, Deepan. Thanks so much for being with us. You have a good day and we'll connect again soon. Thank you for joining in.